Good morning, traders, and welcome to BCR's morning market analysis. First up, let's have a look at the US dollar. The DXY edged higher to around 98.2 on Tuesday, but remains near its lowest level since early October as markets digested minutes from the Federal Reserve's December meeting. The minutes showed that most Fed officials support further rate cuts next year if inflation continues to ease, reinforcing expectations of an accommodative policy stance, despite clear internal divisions between the Fed members. Political uncertainty also weighed on sentiment after President Trump signaled a preferred successor to Fed Chair Powell and raised concerns about the Fed's independence. Overall, the dollar is down around 9.6% this year, marking its weakest annual performance since 2017, driven by rate cut expectations, a narrowing yield advantage, and policy uncertainty. Technically, the index remains in a corrective phase below the 200-day moving average at 98.99, with support at 97.75, followed by 97.46. Next, let's have a look at WTI. Crude oil is trading around 57.8 per barrel, extending a rebound from last week's low of 54.88. Prices found support at the 50% retracement level near 56.86, helping drive recovery. Rising geopolitical risks, including renewed tensions involving Russia, Ukraine, and Yemen, have lifted risk premiums, although the broader medium to long-term downtrend remains intact. Technically, WTI is trading within a short-term range between 54.88 and 58.78, with key resistance around the 58.78 mark and the 50-day moving average at 58.88. Holiday trading, thinned liquidity continues to limit conviction in price moves. Next up, let's have a look at gold. Gold rebounded above 43.50 per ounce on Tuesday after suffering a sharp profit-taking driven decline of more than 4% earlier in this week, which is its largest intraday drop since October. Despite the correction, gold continues to benefit from strong safe haven demand, supported by escalating geopolitical tensions and expectations of further Federal Reserve rate cuts. Gold remains on track for its strongest annual performance since 1979, underpinned by robust central bank buying and ongoing ETF inflows. Technically, the broader uptrend remains intact with resistance around the $4,400 mark, while key support sits around $4,300. Lastly, let's have a look at the Australian dollar, which extended its rally, reaching a 14-month high of 67.27 on Monday before consolidating at elevated levels. The currency posted a 1.6% gain last week, which is its strongest weekly performance since April, and is now up 8.5% year to date, snapping a four-year losing streak. Strength has been driven by the RBA's December meeting minutes, which signaled reduced confidence that the policy remains sufficiently restrictive and left the door open to further tightening if inflation does not slow as expected. Markets now focused on Q4 CPI data, which is due on the 28th of January, which could influence expectations for the February 3rd RBA meeting. Technically, the pair remains above the rising 10-day moving average at 6669, with momentum indicators supporting the bullish structure. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.